All right, welcome out to Tackle Trading's halftime report. We're very excited to be with our community here today to break down all the market activity. And if you are new to Tackle Trading's YouTube channel, make sure to hit that subscribe button as we're going through the show here today. Like and share as well as we navigate the markets in our daily routine we like to do here in the halftime report with our community. I got the amazing Coach Old Money, Greg Holmes, here today. Greg, how you doing, my friend?
Fantastic, man. Looking forward to this. I love these Thursday meetings. They're a lot of fun, and I expect lots of good banter today. So lots of
Heavens,
things going
yes.
on in the market. Yeah.
Heavens,
So
yes. Lots to talk about when it comes to the central bank. Greg, we like to bring on one of the coaches every day into the halftime report, and you guys like to do a little educational piece on things that are very near and dear to your heart, and one of those things is fundamental analysis. Greg, what do you got in store for us today?
yeah, a couple of pretty important concepts: market cap and enterprise value. What this discussion, today's discussion, will lead into. When you get an understanding of market cap and enterprise value, you have a lot more metrics that can come to the forefront to really dial in on how well a company performs. And so today we're going to set that foundation, and then going forward, we're going to use that foundation to build up our analysis, fundamental analysis knowledge, and really hone in on some cool concepts. So
And you know that everybody geeks out on market cap conversations, right? They're
yeah.
very easy to understand. Oh, Tesla just made $300 billion in market cap, and the rest of us traders were like, "Yeah, it's all just fake money." Right.
Yeah.
I like that. I like that EV conversation. So I'm looking forward to what you have in store for us in our community here today in another edition of Fundamental Focus. But before we get into that, Greg, we do have things to discuss from a macro perspective. And the Central Bank of the United States met yesterday, and we do have some conclusions on a little bit of their monetary policy that they've been discussing over the last 6 months, and that ultimate question of when does tapering begin and how much and what is the pace of tapering. There's been a lot of speculation, myself included in that speculation, regarding the timing, the pacing of it, but we got rumors now become real, and the announcement is very simple. It is going to come in at $15 billion per month. Tapering begins in November. It looks to be an 8-month program where they look to curtail about $15 billion per month over 8 months, and they do expect to be out of the quantitative easing business by the end of June, going into July. So it kind of meets that time frame regarding what they've been telling us. And on one hand, you can say, you know what, Fed, you were fairly clear with this tapering conversation. You've outlined kind of what the expectations were. To me, I think they could have been a little bit more transparent, and we probably needed to do this decision before this moment in time. But at least we get some final detail regarding the tapering conversation. And so that is where we are looking at. Now, one thing in all of these Fed announcements is the interpretation of the language. That's very important because it goes to where the Fed's mind is at and where their head is at regarding interest rate policy in 2022 and beyond. Now, the Fed funds rate was expecting 2 to 3 interest rate hikes in 2022. I've said here in the halftime report that I kind of feel that is not in the cards. And the reason being, I just feel like this Fed will punt when there's a decision to make. The Fed has shown that they will punt. And Greg, you and I have joked about this. It's 2nd and 3, and the Fed's punting, right? I mean, we've joked about that, and so I
Yeah.
kind of have that same philosophy moving into the future. But I'm interpreting the language that they put out there regarding tapering as a little bit dovish, because they did leave it open to interpretation. And Jay Powell did discuss this. This is a Jay Powell. This is where he shines, if you want to give it to him, where he leaves everything open for the future, right? He
Yeah.
leaves everything open. And so in discussing the timing and the pacing of tapering, he left it open to being more data driven in the future. And he talked about how the pacing of tapering could change based on factors that come through, such as inflation, labor market numbers, or any of the metrics that the Fed likes to traditionally look at. But in my opinion, and I think the market's opinion as well, typically speaking with the Fed, when you leave it open to interpretation, that allows them to be more dovish in the future, because I do not anticipate the Fed coming out and saying, say in February, for example, I don't see the Fed coming out and saying, you know what, things are going really good, guys. We're going to do $30 billion a month. We're going to taper 30 billion. I don't see the Fed changing the pace of the tapering to make it quicker, which would be interpreted as hawkish. I do see many scenarios where we get, say, a bad earnings, not a bad earnings report, but a bad economic report or a bad labor market number or something along those lines. And they'd be like, hey, listen, we got to only do 10 billion a month or 5 billion a month, or we're not even going to taper this month, for example. And so I kind of interpreted that as the Jay Powell leaving the door open for them to stop the tapering in the future. And so I saw that as a little bit dovish. The second thing that was very important in this Fed was the conversation on inflation and the debate we're having, not only as market participants, but as people in general on inflation. Is it transitory or is it something else? Now, obviously, I think I certainly do agree with Jay Powell that there is some transitory inflationary pressure being placed on the inflationary numbers right now based on the supply chain metrics. But I also feel like the money we pumped into the market over the last 2 years, both in terms of our pandemic response as well as the trillions of dollars the Fed has gift wrapped in the New York banks, has had an impact there as well that might be a little bit more longer term lasting. Well, they talked about this yesterday, and Jay Powell was asked multiple different times in the press conference regarding his beliefs on the transitory nature of inflation. And over the last 3 weeks, the Fed has tried to remove itself from the transitory language. But remember, the belief in transitory is that the inflationary pressures that we have seen across the board in every country around the world is due to the supply chain crisis. And as the supply chain crisis dissipates, the pressures on inflation should contract as well. That is the belief. Well, even though Jay Powell tried to navigate the word transitory, he did. I watched the entire press conference. Every time it got brought up, he winced a little bit, that type of thing. Like, he tried to navigate using the word transitory, but he was making the exact same arguments as transitory type arguments. And in doing so, I certainly did interpret that as fairly dovish, because when you look at the conversation of transitory, if you believe that that all the inflationary pressure that we are seeing in America today is simply due to the pandemic response, shutting down our economy and getting those things back up and running and fixing the supply chain crisis along the way, that means it has nothing to do with your monetary policy. That means it has nothing to do with America. That means it has nothing to do with American economic philosophy. What that belief is centered on is other countries around the world and us collectively fixing a supply chain crisis that is worldwide. And so to me, this interpretation of the transitory nature of inflation is extremely dovish, in my opinion, given that the Fed has not even begun to discuss rate hikes. He mentioned that multiple times yesterday. We've talked about, and this is Jay Powell, we've talked about the process for tapering. We have not, and this is Jay Powell, we have not begun the process of discussing what interest rate policy looks like in 2022. Honestly, that is a fairly dovish statement coming out of Jay Powell. And if they continue to believe that the recent rises in inflation are simply transitory due to the supply chain crisis, it simply allows them more time for that to fix itself, which means to me, the entire point was to tell the market, here's our tapering, here's what we're doing. But you guys who think that we are automatically raising rates in the back half of 2022 simply because we get tapering done. That is a false belief. That is not in the cards. And so I do think the market is interpreting this moment in time with tapering, even though we are reducing our monetary surplus, our monetary stimulus to the market. It is still seen as a fairly dovish environment, given the fact that Jay Powell has signaled that he is not ready to discuss when liftoff actually will begin.
I got a couple of thoughts with that too, right? And I think the reason that they're dovish is kind of a point that you made. They're saying, okay, we're going to do this tapering now. This is what we've decided to do, but everybody knows that they reserve the right to change their mind at any time, right?
And that's the subjective nature, Greg.
100%,
right? Yeah,
100%. And so we all know that. Anybody who's actually ever given this a little bit of thought, they're taking what they have today, the situation they have today, and they're saying, okay, we're willing to do this. Well, if the inflation isn't transitory, or let's say that some of it, okay, some of the inflationary pressure is transitory, and when the supply chain issues get fixed, some of it pulls back. But is it going to be all of it? You know what I mean? You've got some things that avocados, for instance, I read today, at an all-time low price. No inflation issues there. You look at other things like fuel and other food things, right? Lots of inflation there. Even when they fix the supply chain issue, does that roll all of that back? I have a funny feeling that it doesn't necessarily.
Right. I have a funny feeling like we're going to change a couple economic reports and how we calculate inflation.
Precisely.
That's what I think was going to happen.
This is the change I'm talking about, right? So, right now they've got a set of parameters, and they said, okay, we're going to do this. Those parameters literally could change week by week, month by month, year by year. So the fact that he's not having the discussion about rate hikes, I find that hilarious, because I remember you and I having a conversation not too long ago on this very program where we were discussing about having a meeting, about having a discussion about a meeting. You know what I mean? It still seems like there's a lot of
We have not had the discussion about when we're going to schedule the meeting, Greg.
Exactly.
We need to have that discussion first, and that's that is kind of what is going on with the central bank. But it's the subjective nature of monetary policy that really does drive me crazy, though, because in my opinion, and I've tracked Jay Powell's career ever since he became the central bank president, there has been only one time he made a tough choice, only one time. And he got blasted for that raising of interest rates in December of 2018. And the market went down 10, 12, 15% in literally nothing. They literally called the plunge protection team, which he's a part of, to come fix the problem on December 24th of 2018. That's how the market responded to the one time he tried to be hawkish. And from that moment on, this man, Jay Powell, has been one of the most dovish monetary presidents in the history of our country.
And he's going to remain that way until, and this is my own thoughts, right? But he's going to remain that way because he has no choice. He's already learned his lesson from 2018.
He's committed.
Absolutely. He's going to remain that way until he's forced. This is, as far as the little I know about the Fed, they only do things when they're forced to kind of do them, you know what I mean? So he's gonna play this game. He's gonna push the goalposts out as far as he can until something, whether it's inflationary pressures, whether it's I guess it would be hyperinflation would be the big thing. Once that happens, they're going to be forced to do something. But I don't think he's going to play his hand until that day happens, because if he does, guess what? Markets are going to go nuts. He's going to get a lot of pressure. They're only able to do so much to begin with. So I think that's not an unexpected thing from him to act in this manner.
I agree. And again, when you're looking at kind of what the Fed did yesterday, we're seeing the price response here from yesterday and on. We've seen the market respond in a fairly bullish environment, but a lot of this is at the market level, the high level nature of the market. We are not seeing all of this movement happening in the actual underlying of the sectors. Finance, for example, breaking a little bit of support. Goldman, thanks Goldman. Just want to say that again. Thanks, Goldman. I can't believe Goldman got me.
And
I'm
and this
so
is the one
disgusted.
we
I am
and this
so
is the one we
disgusted
saved
by
in
this.
2009, right? It
Yeah,
was
this is
Bear
what we
Stearns or
saved.
Goldman, right? So
Yeah, well, like that is the proverbial rock and hard choice right there.
yeah.
Like that is that one. Which devil do we save here? Oh, let's get Goldman, right?
Yeah.
But yeah, Goldman got me on this little breakdown here. But again, Goldman, seriously? Man, fool me once and twice. I will remember this one for a decade, Greg. I promise you that.
I hear you, buddy.
But
I
you
hear
are
you.
seeing some things happening at the sector level that is changing a little bit of the dynamic there. And so we're going to take a look at those. But from an overall price response here, Greg, what is your read on the market, given the fact that here's the Fed right there? You don't need my interpretation when you got the market telling you exactly what they think of what J Powell had to say yesterday. Obviously, the market interpreted it as bullish for the market, i.e., dovish type monetary policy. Saw the market really kind of fire off there. From a daily perspective, this market has had a methodical grind up over the last 2 weeks, just up a percent, up a half a percent. Doji, let's go up again. Greg, as we continually get a little bit overextended in the marketplace, and again, I do not believe the market is telling the story of the sectors right now, but in terms of the market specifically, how do you navigate this market, Greg, that has seemingly not even it hasn't had a high base, it hasn't had a flag, it hasn't had any bullish pattern, it's just had this methodical drift. How do you navigate an environment that doesn't want to form patterns for us?
Yeah, well, if you're in it, you ride it, you ride the wave. If you're not in it, I think you have to wait. I think you have to exercise a lot of patience in this market, especially if you're trading the indexes right now.
Yeah,
Like look at that float. Like that's was that like 3 weeks? Almost three
yeah,
weeks with
about 3 weeks.
with nary a red candle anywhere to be found.
Hmm.
It feels a little frothy to me. And I think when we start to talk about the sector conversation, when the sectors start to break down first, and yet the market kind of gets that little float, that continued float. I think there's some telltale signs when you start breaking down to the sector level there. So, like I said, you can kind of follow this along, play it, momentum wise, because it hasn't really changed yet. But I would be again. I always do say this when we're at new highs. New highs can always get much higher, but I always kind of exercise a little bit of caution. And just with this recent run, I like the fact that it keeps moving, but I'm a little bit cautious about, if some of the sectors start to break down, I'm a little bit just not afraid, but just a little bit cautious about getting too involved here. And again, I
Yeah,
love patterns as much as you do. If I'm getting involved with the S&P 500 here, I need it to either pull back, high base. I need something to give me an entry point, and I just haven't seen one in 3 weeks. So
yeah, and I haven't as well. It's been that slow, methodical grind. It's been a very good trending environment. It's been a very good trading environment. But from the market itself, talking about the market index, it really hasn't slowed down. We've just seen this methodical continuation of a little bit of momentum in the S&P 500. You're seeing a very similar scenario play out in the NASDAQ, as the NASDAQ has not only caught up. We talked about this for 3 consecutive weeks. The further you fall, or it works both ways, right? The higher
mhm.
you go, the more you can fall. The further you fall, the more you have to catch up. Well, the Nasdaq caught up to the S&P and then some. It's been an absolutely just juggernaut ever since you saw the breakout against the high base. Look at the momentum just continually build. And this momentum in the Nasdaq so far, Greg, has not been subsiding. You're seeing the continuation of increasing momentum environment. What's
Yeah.
your read in the Nasdaq?
Well, I think the most interesting thing here, Matt, is look at 2 days ago. We
Yeah.
just got our golden cross of the 20 over the 50 2 days ago. That's a sign of strength, right? So even the fact that this thing moved as much as it did up until that point, you got this crossover. Now, some people, they don't kind of pay attention to that, but I do. And the fact that we got that golden crossover, and now you're seeing that increase in candle size, or that increase in momentum. Yeah, it looks really, really strong. You know what I mean? Like really strong. And so adding these kinds of things up, tech seems to be the flavor of the day, flavor of the week, whatever you want to call it, and it doesn't show any signs of slowing down. So I think you gotta go with that momentum, whether you're playing the individual stocks or the index itself. They're flying, and let them fly. That's let your flag fly, so to speak, right? So
Let your flag fly. I agree with that. Greg, I got to do it. You and Tyler have had this very public debate of which you've been winning for a very long time on the Russell 2000. But Greg, Russell 2000 breaks out from the time I talked to you last week to today. The Russell 2000 has broken out of that 2300 level. It's reclaimed that ultimate resistance level of 2350 by 2360. You're seeing a tremendous amount of momentum here, Greg. Very similar to the rest of the market, though. You are a little bit overextended in the short term. What is your overall read in the Russell 2000? And are you on Team Tyler now? I know you guys had a nice little hot and heavy debate yesterday in Trade Masters. We'll talk about that here in just a second. By the way, Greg, I love hanging out in Discord watching Trade Masters. I love it. We only get a few power users over there right now, but if you guys want to come out and hang out with Coach Matt in our Tap and Train Discord channel while we watch Trade Masters every week, we have a lot of fun. We talk about the trades, we break them down. We have literally loved hanging out in Discord yesterday. And
we discussed how one coach gets ripped off from a victory.
Listen, we leave the whining to you and Tyler on who loses the matchups. But I thought you guys had a great show last night.
It was a lot of fun.
Loved your picks, and I could geek out hanging out in Discord talking with the community and breaking down your guys' trades. It's just a lot of fun. But in terms of the Russell 2000 here, Greg, are you finally on Team Tyler? Are you finally seeing this as a legitimate breakout with some legitimate opportunity on the top side?
Yeah, you can't argue with the breakout. The breakout was clean, right? You've kind of got that gray box there. You can't argue with this breakout. It was clean and it was solid. No doubt about it. My thought here, really, from the daily perspective, we're seeing a red doji today. I think there's an opportunity if it pulls back to this old support level or this old resistance level, which would be new support. Looking on the daily chart there, I think that's an opportunity. Now, my thought kind of goes to the debate that Tyler and I've had for many, many months now is that the Russell has kind of come back to its old personality where it likes to kind of trip along sideways, right? Now, my question is it going to trip along sideways at a higher level? And that's really what I'm looking for here. If it does pull back to that old resistance level, become support, does it then start to trip sideways as it's done in the past and find a new kind of range that it stays in? If it does, I think it's infinitely tradable. If it fails and gets back into that range there, then it's kind of a one-off for me. I am going to be paying attention to that breakout level.
So I heard you holding on to your stubbornness a little bit there.
That's what I called it a legit breakout.
Yeah, but I didn't hear a trending environment. I heard it might go neutral. That's what I heard. I get it. I gotta disagree though. I like the momentum here. I like the legitimate breakout here, and yeah, I do think you're a little bit overextended. I'm with you there, but again, the market is overextended right now as well with what's happening in the NASDAQ and the specifically the discretionary sector. So you are a little bit overextended here in the short term. Would not shock me at all. In fact, I would love a little bit of hesitation. Would love a little bit of a flag. Watch that 90 EMA climb up and give us some momentum trigger here. Ultimately, the question is this a legitimate breakout? I think that's
100%.
Ultimately the question. Yeah. And until you see a higher level of support following the breakout, that is an open question. 100%. Yeah. We have the higher high, but remember, a trend has higher highs, higher lows.
Correct.
And so we got to see that occur first. We're a little bit overextended. We can maybe see it over the next week or so, but I do think that is a very legitimate concern. I like the ability for it to form that higher level of support. I think you do as well. It's just a matter of if it does this number, Greg, and I think that's the debate. If it does this type of number where it finds a higher threshold and simply looks for more neutrality, or if we do see that strong trending environment. That's really the debate at this point. Stay with us as we break that down over the next week as the Russell does navigate that next higher high, higher low scenario. Now let's talk a little bit about,
hold on.
yeah,
I want
go
to make
ahead,
one
Greg.
more point
Yeah,
here.
go ahead.
Notice 2 weeks ago on the Russell here. This is something for kind of a little teaching moment for everybody here. 2 weeks ago on the Russell there, look how tight these moving averages. You got the 200, you got the 50, you got the 20, and you got the 9. And then look at the energy breakout that it got in that 2 week span there. That's always something when these moving averages come together, that's an energy build in there, and you got a really big candle right after they came together, and then it had some follow through. And so that's something to pay attention to when those moving averages come together. It's not going to give you a big heads up that it's going to go to the moon, but it can just be something that you can pay attention to. And as we could see here, once it got kind of pinched together there, it did explode with some decent strength here. So just wanted to make that
Awesome.
point.
Thank you for clarifying that. I agree. You see the cluster of moving averages right there?
Yeah.
It's not shocking to see a little momentum
It's rare
change.
when you get the
and again,
200 and the 50 and the 20 and the 9.
It's not every day. No, it's definitely not. And that cluster can work both ways, right? I mean,
100%.
that cluster can work both ways. Obviously, we saw the bull take out. I got to charge the headset real quick. I'll be right back.
Yeah, no problem. But I've seen that scenario before,
Yep.
where you get a bullish, or you get a pinch together, and then you see that first bullish candle there, and then after that, this thing just rode. It never even tested the 20 about a week and a half later, and then just carried on.
Yeah,
so
that to me was a key point there.
it was absolutely.
It got the snap. It was fighting against the resistance channel, got blown up, and then just held its ground, snapped back, and then you saw the strength kind of build after that. When you're looking outside the market indexes, Greg, we like to talk about commodities, and OPEC is meeting here today to discuss whether or not they're going to increase a little bit of supply. Oh, paint me skeptical. I don't know. They might have already came out and announced. I haven't read the news in the last hour, but paint me skeptical on whether or not they do that. I kind of have a feeling that OPEC's going to line their pockets here on this one. And again, I'm not saying anything negative about OPEC. So Saudi Princess, this is not the day. I'm not saying anything negative. I am saying when you go from negative oil prices last year, literally begging people to take your oil and nobody will do that, and you're losing hundreds of billions of dollars and you can't pay your dividend and your pensions are getting blasted and your country is concerned about the overall nature of the economic status of your country, a year later, you might not be willing to just open up the floodgates and supply the world with oil and drive down the price of oil to where you can't pay those same things that you couldn't last year.
Yeah.
All I'm saying is that if this was my decision, I wouldn't open up the floodgates either. Okay?
Yeah, I agree 100%.
I think it's time to solidify those balance sheets a little bit, and then you open it up next year. So we'll have that conversation. But it is widely anticipated that OPEC is not going to open up the floodgates. And again, I get what Biden is trying to do, put pressure on Russia, put pressure on Saudi Arabia to open up the supply chain to a certain extent so that the inflationary pressure can come down. Biden's looking for a political victory. Saudi Arabia and Russia does not care about American political victories in any capacity. Any capacity. They're looking to solidify their fiscal balance sheets. I kind of expect OPEC to stay pat here. When you're talking about oil, though, and I got Coach Mark's take on this today. He's kind of my oil guy. I got Coach Mark's take on it, and I said, Mark, I'm expecting OPEC to do nothing. Okay? He said, so am I. But Matt, if they do something, everybody in the market expects them to do nothing. That could shock the short-term trends in oil. And so just be prepared for that is what he was suggesting. When you're looking at this technically here, little bit, not even a little bit, we've been talking about the shifting character of this momentum over the last 2 weeks. We downgraded crude oil last week. We downgraded the energy sector as well due to the shifting momentum and the double top. Now you're seeing the first time closing underneath the 20-day moving average. You talked about crosses, Greg. Well, I got a cross of the 9 EMA coming underneath the 20 SMA, and I know that's not as important as, say, the 20 against the 50 or the 50 against the 200, but those still can provide some short-term momentum. Where is your head at in with crude oil right now? Are you concerned about the slowing momentum? And if we do close underneath 80, what would your response be as a trader?
Yeah, so I think there's a few things to unpack here. I think, we look at this kind of recent run here. This was a pretty stellar run, even from, say, 65 up to 85 where we are now. Yeah. I'm not really that surprised to see a little bit of profit taking, a little bit of weakness here. Obviously, there's some uncertainty. I just looked at a news cycle here. OPEC is going to stay pat. With their gradual increase, they're not succumbing to the U.S. pressure.
So they are solidifying the balance sheet. Okay.
That's exactly you called it, buddy.
Saudi princess says you get your Christmas bonus. You guys can be happy now.
Yeah.
Go get that second, third palace. Let's go.
Yeah. So there's a level of support here. I would say around the 70. I want to say that's about the 78 there. That's the place I would be paying attention to very, very closely, because at the point where it would probably get down to that, like it's right at this 80 level now. Yeah. If it got down a little bit lower, obviously that 50 is going to catch up. So pretty important area right here to see if this holds. Obviously, if it doesn't hold, then you've only got your support of the 50 there. Before you start to get a pretty serious drop here. It wouldn't surprise me, especially with the announcement that they're going to stay pat and just continually gradually hike the number of barrels that they're putting out. I wouldn't be at all surprised to see a bit of support here and a run back up towards 85. But if it breaks, then yeah, there's going to be some more profit taking and probably an acceleration to the downside is how I see it.
I've seen this a lot on crude before, and you get volatility shifts, usually you see a trend shift there too. Yeah. Just usually you do. And it wouldn't surprise me in any capacity to see at a minimum range bound, at a maximum a little bit of a decrease in price, maybe even coming into 75, right where that old breakout channel was. So I do think if this was, like, for example, if I'm looking at this same price action tomorrow, it's another downgrade for me. Yeah. And you are seeing a little bit of the bears take a little bit of the short-term control here. And in Saudi Arabia standing pat notwithstanding, we were seeing a slowing momentum in this trend before OPEC met this week. We were seeing it last week. That's where the downgrade lived, was last week. And so you are seeing a little bit of momentum shifts here. And, the accumulation process in trends, you're now coming to a conclusion in the short term, in my opinion. And when you're looking at the energy space itself, don't get me wrong, I love the ability for energy to maintain the price thresholds that it has established over the last month or so, over the last 2 months or so at these higher elevated price thresholds. And I do think energy has another leg up in it, but that leg might take a little bit. I think it's time to maybe lock down some of those risk graphs a little bit, start writing some covered calls against some of those existing positions. What are your thoughts on that?
Yeah, 100%. So that's kind of the point I was making about taking some profits here, right? I think we've seen a little bit of that already. If it breaks 80, I think we see a bit more of that. That could flush it down, even if it's just temporary before that next leg happens. So yeah, for me, when I start to see key level breaks, that's when I'm doing, covered calls, in the money covered calls, maybe dumping some positions and just taking the gains and then looking for another re-entry area. Those are all good positive things in my estimation. And again, I'm not really seeing anything yet that makes me worried about a big drawdown in the sector. Yeah. But I think there's potential.
Either am I. I'm not concerned, but when you start to see the slowing momentum, a little bit of breakdown, it's just a matter of letting it establish its support levels. Let it establish its trend. Let it establish its pattern. And all of these things take time, and that time can add up to writing covered calls and bringing in some cash flow in the short term while they do reestablish some better buying parameters to them. Shifting a little bit to gold here, obviously gold's going to have an impact when the central bank has a conversation on anything with monetary policy, but specifically when they do make announcements like they did yesterday. Gold's been a very volatile beast over the course of the last month or so, Greg. And I've been very open with the community here in the halftime report. It's been very difficult to read. it's been very difficult to read. And when you can't read something from a technical perspective, good luck trading that instrument. What is your take on gold here? I've gotten Tyler's, he's concerned. I've gotten Mark's, he's concerned. But in discussing this with the coaches over the last month about gold, the concern to me, and again, I don't want to put words in their mouth, Greg, but everything they talk to me about their concerns are all due to the lack of consistency here, where you don't see any consistent price movements. You see some big upward movements and big downward movements in price, but a lot of wickety wick nonsense up and down, difficult to read. What is your read? Doesn't match the rest of ours, and is gold a stay away, or do you see an opportunity here?
Yeah, it is a tough trade. It's been really, as you said, lots of breakdowns, lots of jump ups. It's been just crazy to trade. I noticed yesterday when just around the time the Fed spoke, gold was getting crippled, and then boom, we had a little bit of a reprieve. After that, so yeah, it got flushed yesterday, then it kind of recovered a little bit. So yeah, it's just tough. Intraday, obviously it's been a trading vessel there, but you look on a daily time frame, it's challenging. Now gold stocks, very much similar. I found a lot of the gold, the popular gold stocks have been also a tough trade as well. So I think from an investment standpoint, I like where gold, may be headed in the future, but for where it is right now, kind of a tough trading vehicle for sure. That's really my take on it.
Agree or disagree? Okay, I'm going to make a statement. You agree or disagree?
Okay.
I feel GDX is still in the zone of accumulation where you can write covered calls on.
100%.
Okay. I just wanted because what I'm seeing here, and again, it's been volatile, but what I'm seeing here is you got nice support level at 31, nice support level at 31. The V-shaped recovery blasted through all your moving averages and came all the way back up into the 200-day moving average. That's extremely overextended. The buyers came in strong yesterday at 31, where they have historically.
Yeah.
I see
No,
that as
100%.
a little bit of a head and shoulders reversal formation. And when you're still looking at GDX, you're still talking about GDX at the ultimate lows here. I still think you're in the mode of accumulation, long-term type stuff where your primary purpose is writing covered calls.
Yeah, and so the only thing that I would say is back on the daily chart there, you've got a head and shoulders, inverted head and shoulders forming. The only, I guess, issue is that neckline for this head and shoulders is going to coincide with the 200, and already GDX has failed at least twice here at that 200-day moving average. So this is why it becomes a tough trade. You've got that accumulation that you just spoke about, but if you're trying to trade this directionally, where are you going to go from here? Getting in about 32 and a half.
I don't have it, and I want to be clear. I don't have a directional read here.
Yeah, it's a tough directional trade right now.
Yeah.
But looking at it, as you said, accumulation distribution kind of a concept, or for me, more of an investment kind of concept. I do like all the things you just pointed out. It's got some decent support, but it's got to fight through. It's got to fight through some stuff as well.
I agree. What has not been as difficult has been Bitcoin here. Bitcoin being taking the proverbial digital gold type title over the course of the last couple of years, and it has earned every right to be considered that. Many people consider this to be even a better hedge to gold moving into the future. I am not one of those. I do still believe history has a role, has a say in some of that stuff here, Greg. But regardless of that debate here, technically, you are looking at a little bit of a resistance level that has established itself from an intraday perspective. The daily charts have been bullish. The weekly charts have turned bullish. It's a matter of navigating a little bit of this chart from an intraday perspective. You see 64,000 really kind of standing out a little bit. We have confirmed quite a bit over the course of the last week. Greg, what is your read on Bitcoin? And you recently, I mean, within the last couple months, did your first trade in Bitcoin. And what's your read now? Are you looking to add? Are you looking to reduce? What are you looking to do here?
Yeah, so I think you kind of look at where this hit that 67,000, the high there. That was really overextended, right? Like that ran very hot. I would almost give it a parabolic type run on that.
I agree.
So this
I agree.
this this sideways chop here, not a big surprise. I still think Bitcoin's got more in it. I actually like this kind of setup here. It's come down, it's chipping sideways, it's hanging on to those moving averages, the 20 there. Yep, you've got a clear resistance level there now. So you've got an entry point above there as well. I think it's just taking a breather as far as I'm concerned. And until
Yeah.
it can break that 20 MA, you know what I mean? Like it's just riding that thing like crazy. If it continues
Yeah.
to do that, I think you've got more upside to Bitcoin here. And I'm happy I got involved with it a few months ago. So
Yeah, you got involved right. Perfect timing on that one there, Coach Greg. But I agree. I mean, it's pretty simple for me. As long as you ride the 20, you're still fine. You
100%.
might have some concerns in the short term, but you're not going to do anything about those concerns. It's more like, well, get going.
Yeah.
Let's go, right? But you see over the last week, look at it multiple different times. Even today, ding the 20, ding the
Yeah.
20, got in the zone of the 20. And so it's obviously riding that. That's a stop out. If we do close underneath that 20, you're looking at maybe adjusting your philosophy in the short term to Bitcoin. But on the weekly chart here, Greg, you're seeing a little bit of hesitation, excuse me, let me come out to that weekly chart here. You're seeing that little hesitation here.
Yeah.
Greg, it looks like a little bit of a high base after an overextended run with a continuation trigger above 65,000. Talk me out of it.
No, I can't. That's what I said. I still think it's got
Yeah.
more in it. Just looking at the daily chart and then breaking it into that weekly is a nice little breakout potential there. Obviously, I'd love to see again, even on the daily here, I'd love to see a little bit more sideways here. Get that 50 and that 200 to catch up to the other two moving averages a little bit here. I think it looks a lot more attractive then. And obviously on the weekly, yeah, I think you've got a really good opportunity for another breakout there. So I don't think Bitcoin's going away. So,
No, neither do I. And it might go up quite a bit if we do achieve that 65,000 confirmation on the weekly chart. Because again, you look at that on that weekly, that looks really, really good above 65 with the multiple time frame analysis. But I do think the triggers from a swing trading perspective, I think those triggers have happened. It's just a
yeah,
matter of navigating that and seeing that now break out and seeing the continuation, or on the opposite side, seeing that 20-day moving average get blasted and allowing Bitcoin to reestablish and take the L a little bit.
yeah.
Let's shift focus. Let's talk a little bit about earnings roundup here today. Greg, I'm going to rapid fire these. I only got a few picks today for the community on earnings roundup. Let's start with tech giant Qualcomm here, Greg. Qualcomm gapping out on positive increases in revenue guidance, but from a raw numbers perspective, was not that impressed. After GAAP earnings, it came in at 192 versus the expectation of 226. Revenue did beat the expectation, 9.5 versus 8.9. But the big story here isn't about the raw numbers. Anybody that's been watching the halftime report over the last 3 weeks during earnings season, they know it's all about guidance. If you have guidance, what they say in guidance is so vitally important right now. Qualcomm increases revenue, they increase EPS guidance, and companies that have increased guidance this quarter, they have been rewarded. Companies that have not increased guidance this quarter, they have been absolutely punished. Here's Qualcomm. They increased guidance, positive response by the marketplace. Little gap out doji type scenario with indecision following the cash open. Greg, do you have any read as we start navigating the 160 resistance level that Qualcomm hit up earlier today and does have some history at 160? Or is this just a matter of positive news, positive for the sector, positive for your other semiconductors that you do track? Or is it something you wait for a trigger above 160?
Yeah, I think you got to wait for their trigger regardless. But I like the earnings hat trick here. Beats and improved guidance. So
Mm-hmm.
pretty strong here. They've obviously got the guidance to back it up there. Yeah, I don't think there's a trade till it breaks 160. I don't expect that really right now.
Either do I.
Actually, I shouldn't say I don't expect it. I actually don't want it.
Today.
Yeah, today,
Today.
exactly.
Yeah, today.
I'm
Yeah.
feeling very Coach Frank like right now. I'd like to
Ooh, I
see it
like
chip
that.
chip sideways a little bit,
I
and
like
then
that.
give you that entry above 160, because I think you got a quick trade up to that high of 168 there. So yeah, if we could chip sideways, that'd be fantastic.
I think Coach Frank just said, I'm not vetoing any of Greg's trades tomorrow. We're good. We're good.
Yeah.
But I agree. I agree. I think a lot of times when you're talking about earnings, you're waiting for that secondary pattern to develop. And when you see a nice little positive response on earnings based on the beats in revenue and the increases in revenue and EPS guidance, you're certainly it certainly gets it on your radar really quickly.
Yep.
And it's a matter of where do you see that hypothetical trigger? And I see that at 160. I think 160 does stand out. It's the high of today. That high of today coincides with some old chop as a resistance level, as you can see back here in December. And so I do think it could work itself out. But again, it's got to work itself out, right? You got to give it a
Yep.
little bit of time and see if that 160 channel starts to develop. And sometimes that can take 2, 3, 4, 5, 6, 7, 8, 10 days. You just don't know. But I do think it's one of those environments where Qualcomm gets on the radar, positive response. Maybe we see a gap fill, maybe you see a high base and you trigger, but I do think you wait for a secondary pattern here. Let's talk a little bit about the gamers. Yesterday we had Activision and oh, Coach Greg, I had some what shall we say, choice words for old Activision. Get it together
Yeah.
type
I'm guessing
things.
they missed the hat trick for
Like,
sure.
oh, they missed out on everything. They missed out on everything. Like get a new CEO
I
type
was gonna
missed
say,
out on
did they get a
everything.
reverse hat trick there, Matt?
Uh, no, they did do some funny tricks on EPS, but they almost did the reverse. But no, I was asked a question by Tyler yesterday. He said, Matt, is this an industry thing or is this an Activision thing? And I said, yes, Jess, said this is an Activision thing. This is about Activision not getting their act together. This is about Activision over the last year having from the lawsuits, the needed lawsuits in California regarding the harassment certain employees were going through at Activision over the course of the last few years to the gamers being completely displeased with everything they're putting out there right now, to delays to major game releases for next year. It's just simply something they cannot get their act together. And so when I was asked that question, I was a little paused for concern because it certainly could be an industry thing. But today clarified that a little bit with EA and Take-Two's earnings reports. That speculation of it, this is just Activision, it kind of gets confirmed here today. EA's report was not great. I do not take this report as even a very good report. You missed on EPS. EPS came in at 102 versus 115. Revenue came in line. And if you want to go understand how to read an extremely difficult guidance report, go look at EA's today. They have short-term concerns in guidance, like and to the point of contracting guidance fairly aggressively, but they also increased guidance for full year of 2022. That's something Activision did not do. And so you have an increase in guidance full year for 2022. That was more than enough to offset some of the negatives in their current report. Not something I'd be looking at here on the daily chart, but keep an eye on the weekly chart. We've seen the Russell 2000 break out of prolonged neutrality. Well, you got that opportunity on EA following a lukewarm earnings report. But really, the standout to me and the gamers today was Take-Two. And I do want to get your technical read here on Take-Two because you are gapping above a little bit of a breakout channel that's fairly important to Take-Two Entertainment. Take-Two here announces a disastrous EPS number, 9 cents versus the expectation of $1.33. Revenue came in, it was a miss and then some, right? Revenue came in line. Revenue came in line. But here's Take-Two. They increased guidance. So the short-term concern obviously alleviated due to the guidance report. question I have for you is Activision's a stay away until further notice, right? Until we see some degree of support form, some degree of fundamental underlying changes. What about EA's kind of just stuck in mud here? Take-Two, the little bit of the standout winner in earnings season so far. From a technical perspective, Greg, you are reclaiming some of the resistance levels that have established over the last 6 months or so as you see that right shoulder breakout. How do you approach this from a Take-Two perspective? Am I reading something or am I reading nothing here, Greg, is the question.
Yeah, so looking at all three of these, I hearken back to the old days where we played buy one, dump one, hold one. You're definitely dumping Activision. I'd be holding EA and probably getting involved with Take-Two here.
Mhm.
It is breaking out. I'm just not. I don't think it's something I'd want to tackle right now.
Yeah.
It's a little scary. The big miss on earnings. I think that's unacceptable myself. But if it can,
It was a legitimate miss too, Greg. It wasn't just one of those
100%.
counting numbers. It was a big time miss.
That was ridiculous. Monkeys could have come up with a better number
They could have
for that.
They could have.
But yeah, I think right now this one here, I always kind of play this is the way I always do with the earnings. Is it's got to set up something secondary. So
Yeah,
even though this did break out above that level, I need to see it either trim sideways. I need it to pull back, retrace something. I need something here.
Well,
right now I can't. I do like it. It actually looks pretty good on the weekly, but I don't know what that miss, but I think it still maybe some time to digest, right? So,
and it's not just the miss for me too, though. It's the complete lack of consistency in the trend. You have this big V-shaped recovery, then slowing momentum, then a gap out, come back down. There's just no consistency in the analysis, in my opinion. And so I kind of feel like, if you're buy, hold, and dump, there was a couple times you brought us 3 utility companies. I just wanted to dump all 3. Kind of where I'm at here.
Here we are again.
That's kind of where I'm at here on this one. But Take-Two
I got to teach you how to play that game. It's buy one, hold one, dump one. That's the hard part of it.
Listen, I got to teach you about who I am.
I know who you are. That's why I love the game. That's why
I kid. Okay, if I had to, I'm buying Take-Two, writing cover calls on EA and Activision. Get your act together.
Exactly. 100%.
Yeah. So let's move on a little bit, Greg. Let's talk a little bit about the casinos here. Some of the casinos have been on fire recently. Penn National Gaming reporting earnings here before the market. See the gap down, run down here. Well, let's talk a little bit about MGM here. Tried to break out, coming right back down with that cash open. The same thing we saw on Penn National. The difference is MGM gapped out, Penn gapped down. The rundown was the exact same on both of these following the cash open, though. Raw numbers weren't bad, though. Raw numbers were not bad. They came in at 5 cents versus the negative 4 cents on the expectation. Revenue came in above the expectation, 2.7 billion versus 2.5 billion in that expectation. That resulted in a 140% year-over-year increase in revenue. Raw numbers pretty decent coming out of MGM here today. Greg, what's your technical read on the failed breakout snapback right back in the range here on MGM?
Well, I think you said it best. We got a couple that are on fire here. One, the MGM is on fire. It's been cooking real good, and the other one is a dumpster fire for Penn. So anyway, with this one here, the little fake out today on MGM. I don't think that's necessarily a bad thing. I think you get set up for another trade going forward. I think that there's still opportunity there. You just back into that basing sideways on MGM. As for Penn here, it's been looking pretty ugly the whole time. Look at this is a tale of two stocks here, right? This thing's just been flying high the whole time. It's given us a nice high base. This thing's been getting beat up, and it's basically getting beat up some more. So with this here, earnings wise, it's not showing us any semblance of reversing or anything like that. So it's easy to play these two as far as I'm concerned.
Hey, Greg, let me ask you a question. MGM more of a value company, right? Pay a
100%. Yeah.
dividend, write cover calls, more of that type of company. Penn National Game, more of a growth company, correct?
I would agree with that. Yeah.
Okay. Growth companies got to do what, Greg? They got to grow.
They have this. Yeah, they have this
They
thing.
got to grow.
They got to get more money.
They got to
They got to
grow,
make
right?
more money.
Yeah. Listen, simple reality is Penn National Gaming didn't do enough business. It's simple reality. They came in at 52 cents. The expectation was 84 cents. That is a big time miss on EPS. That is not a small miss. That is a 30-cent miss on EPS when 85% of companies are beating low expectations. And that has to be said, Greg. These expectations in the market are still low. That's why we're seeing 82, 83, 85% of companies beat extremely low bar expectations. Penn National Gaming simply did not do good enough. You got to beat the expectation. In a growth company, in a market that wants to be a buyer's market, you got to start with one simple metric. You have to beat the EPS number.
100%.
You have to. And you didn't. Penn National Gaming comes in. They came in at 52. The expectation was 84. That simply isn't good enough. And revenue growth 33.8% year over year in the gaming sector. I'm serious. In the gaming sector, MGM did a paltry 140% year over year growth. We've seen 200, 300. Last quarter, it was routine. We'd see 700-800% growth in that area. Penn National Gaming today came in at a paltry 33%. It's just not good enough.
No.
Paint whatever picture you want to paint, but it's not good enough. Got to do better. Market's got it right. Gap down, sell down. Now it's a matter of navigating where that next opportunity could play out. You got a support level of 57 here, Greg. I don't know. It looks like 40 is where the argument would start, though.
That's right. The only thing I'd be looking is that 200 weekly moving average.
And that's right there at about 40. So it could get a little ugly in the short term for old Penn National Gaming. MGM still holding that base, though. We'll see if it can maintain. A couple other reports very quickly, and then we're going to get into fundamental focus here, Greg. Etsy firing off 62 cents against 42 cents. 532 versus 518. We do not provide guidance, meaning we market participants. They do not provide guidance for Etsy. So we do not have a hat trick, but we do have a beat and a beat. And I'm willing to bet, though, Greg, this type of move is not just a beat and a beat type of move. I'm willing to bet, haven't checked, but I will check later. I'm willing to bet they said something here today, especially as you see that market really start dinging as it gets into the cash open. Greg, technically, we're looking at a pretty overextended scenario on some positive movements due to earnings. On the weekly chart, you're breaking everything. How do you navigate something like this? It breaks, it runs on positive catalyst, but wow, like as a trader, the first question is, where's your trigger? Where's your stop loss? That's really hard. Yeah. So how do you navigate something like this where it just runs so far, so fast?
The old Wall Street saying, miss the pop, wait for the drop. Mm-hmm. So find some support down there around 242, after that kind of flaggy retracement, thing where it busted out there. I always look at these things, and we've had a bunch of these this earnings season where they just explode. You got to just hang tight and be patient. And if you do, I think you can be rewarded. This was showing some strength. It was already riding up before this earnings. Now they've got a good earnings with obviously something they've said. You can ride the strength, just don't chase it here. I think you got to be patient.
Well, and again, it is officially a beat and a beat, but it's not like a Tesla beat. It's one of those very lukewarms. That's why I feel the commentary around it was really kind of what propelled it on the cash open. I kind of feel it's one of those secondary patterns, right? You see the strong move, treat it like a gap out scenario, right? Treat it like a gap out. You see the gap out, strong scenario, but again, too fast, too far. Wait for that secondary setup. And then the last one very quickly, booking.com here. Little gap out, sell down here as it navigates 2540 breakout channel. They came out with some pretty decent numbers though. 3770 against the expectation of 3156. Revenue came in $100 million above the expectation of 4.3 billion. They came in at 4.7. That resulted in a 77% increase in revenue year over year. Pretty decent numbers coming out of booking here, Greg. Looks like resistance. Look at that ding. Here's what I like about it. I love clean resistance channels. It's one of the things that really stands out to me as a technician is when those support and that resistance level is clean, where you don't get that wickety-wick nonsense where it becomes a difficult triggering experience. When you look at this on that hourly chart, you see it kind of ding up into those levels. Let's come back down to the daily. Look at this. Look at that level. Where was it? 2540. Where was it? 2540. What is the high of today? 2539.38 on a $2,539 stock. We are a whopping 61 cents away from that before it started selling. That's the cleanliness of that resistance channel. Keep an eye on that. Trigger seems easy to me. Little consolidation above 2540 makes some sense here. Greg, agree or disagree?
100%. I love this. Now I'm looking for a breakout trade, right? Let it popped and then pulled back. I'm fine with that. A little more sideways action be fantastic. A cup and handle kind of looking thing there on the weekly. Yeah, I just like the breakout of 2540. I think it's a nice directional trade there.
I love that. And we're going to shift focus here today. Tackle trading, we are done with the earnings roundup, and we're going to talk about a tackle short that's very near and dear to my heart. I love fundamental analysis. I geek out on fundamental analysis. Coach Greg, I know you love fundamental analysis as well. That's why you have fundamental focus. Greg, can you just talk to me just very quickly about why fundamentals, though? I mean, we spend so much time on technical analysis, and whether people know it or not, they spend a majority of their analysis on behavioral analysis. Like whether they know it or not, they analyze behaviors quite a bit. Not a lot of people love analyzing and diving into fundamental analysis, but I kind of feel that is a mistake, in my opinion. Fundamental analysis is very near and dear to my heart. Why is it so important to you, Greg?
Well, here's what I've learned. So I started out as a fundamental investor. That's what I did. That's where I learned everything I learned before I ever traded a single stock. I learned about investing many, many years ago. And what I see a lot of is a lot of folks get involved with trading and they're looking for those quick hits. They're looking for the swing trades. They're looking for, I get 3 or 4 offers a day of people wanting to learn to day trade. They want those quick hits. Fundamental analysis doesn't really play into swing trading or day trading. However, when you start talking position trading, you start talking investing, it becomes as important, as far as I'm concerned, as important as the technical analysis itself. So you have to marry those two concepts together when you get to position trading or the long-term investing and portfolio building. So for me, it's what I did for a long time is I basically built portfolios. I went through them, with clients and things like that back when I was a financial advisor many years ago. This was something that was ingrained in me, starting my financial journey. So it's something I still hold on to. And the reason being is because I kind of take a longer term focus with things, right?
Yeah.
Don't get me wrong. I day trade, I swing trade, but I also position trade and I definitely invest. I spend a lot of time building my own portfolios and helping others do the same thing. So if you're going to start to build something where you're going to hold it for a longer period of time, and when I say longer period, you're talking 1, 2, 5, 10. For me, I've got stocks that I'll never get rid of, right? You better have some fundamentals behind those stocks. Otherwise, you could wake up one day with your portfolio and get a rather big surprise if you didn't do your fundamental research. So this is why it becomes very important to me, is when I build my own portfolio or I help others build their portfolios, I want to look at some security. I want to look at some value. I want to look at some safety. All these concerns become very, very important because, like I said, I get questions quite often. Somebody will look at a new company and they'll say, oh man, I think this thing's going to go to the moon. You know what I mean? And I'm like, great. Hopefully it does go to the moon. but how long are you going to be in that stock? Well, I'm going to hold it for years. I'm like, okay, well, let's take a look under the hood and see if there's even an engine in this car, kind of thing, right? So
Yeah.
mixing a few metaphors there, but yeah, you definitely got to take a look at it. There's more nuance when you're going to hold something for a longer period of time. So that's where fundamental
I
comes
love
in.
that. I love that answer, Coach Greg. And today in Fundamental Focus, you're going to talk about market cap and enterprise value and understanding those concepts. A lot of times new traders and just people in general will understand market cap, right? Because it's something that even non-traders discuss, right? Even non-traders will be like, yeah, Apple's got a $2 trillion market cap. Tesla's got a $1.2 trillion market cap. What does that mean, right?
Exactly.
What does that represent? Let's understand that here today in Fundamental Focus. So I am going to shift the floor to you, my friend, and watch you fly regarding another edition of Tackle Trading's Fundamental Focus with Coach Greg.
So yeah, it's very important. I want to talk about market cap and enterprise value, and I'm doing that for a reason today. First of all, the two are closely related, right? So we need to understand both those concepts. But the further part of this, the expansion of this is, every week I come to you guys and I have a little tidbit about fundamentals and things like that there. But to really get the big broad picture here, you got to really build on a foundation. And the foundation of understanding market cap and enterprise value in specifically is tied to a lot of other metrics where you can, as I said, look under the hood of an equity and get an idea of, okay, are you looking at a Ferrari engine, or are you looking at the engine out of a four-cylinder out of a 1978 Pinto? Right? There's very different things there, right? So what we're going to do with these different metrics is we're going to start to break down some very interesting points of, hey, we can start to tell the difference between a Ferrari and a Pinto, and that's really what we're doing. So let's start with market cap. So market cap, when you start looking at this, market cap is just essentially the total dollar value of a company according to its number of outstanding shares. So basically, it's a very simple kind of calculation, but there's a lot of different questions that come with it. So you take the number of outstanding shares, you multiply that by the price of the stock, boom, there's your market cap. Well, what does that mean exactly? Well, there's different types of market cap. You're over 10 billion, that's considered a large cap. You're anywhere from 2 to 10 billion, that's a mid cap company, and then anything less than 2 billion is pretty much a small cap company. Well, again, what does that mean? Well, what it means essentially, is we're looking at a value of a company only in relation to what the stock market thinks it is. Okay. And the downfall with market cap, don't get me wrong, it's used for acquisitions. When companies start to acquire other companies, they use the market cap as a metric, not the only one, but one of them. And so what happens is that metric can change. As we know, the price of a stock changes pretty much every day. So the market cap can fluctuate. But what it does tell us is when you get a very big, large cap company, okay, it tells you that it's more established. So that's just one of the things that we can kind of take from market cap, right? Obviously, there's a very big difference between a small cap company that's got 300 billion and a large cap company like Apple that's got 2.5 trillion. Right? There's a big difference there, but there's some underlying issues that come with market cap. It's a very basic measure, right? Like it doesn't include the nuts and bolts of the company. It doesn't really tell us much in otherwise other than the size of it. Like the size of it, is it a behemoth or is it tiny? It kind of gives us a version of that. Okay, now there's something called enterprise value. So now, at least a lot of people that I speak with, they don't really understand what enterprise value is. Enterprise value is basically, it's taking your market cap, your size of your company, and then it's putting the nuts and bolts behind it. So when we start talking about enterprise value, you basically take your market cap, you subtract all your long and short-term debt, and then you add in your cash, okay? And so what this does is it takes the inner workings of the business and then gives us a more appropriate number to value a company by, okay? So let's say Apple's got 2.5 trillion, the enterprise value will be something other than that. That will actually give us a better way to look at how this company is actually valued, how it's actually working, to be honest with you. So EV comes in, and again, like I said, you're gonna subtract debts and pensions and all that kind of stuff, and then any cash. Now, what I want to show you guys is something very interesting. So Matt had FinViz up here, and so FinViz we can use as a metric. So I'll just use Apple as a comparison tool here. So I can go to FinViz and I can quickly look down here, and I can see this market cap there, and that's 2,550 billion, which turns out to be 2.5 trillion. Okay, so again, that just tells us Apple is really quite large. Okay, you can tell the outstanding shares here. You can multiply that by the price of the stock and get those metrics. But I think there's a better kind of metric to look at. And I know that when I look at these things and I want to know exactly what's happening with the stock, I go to Yahoo Finance. And again, free websites here. You can get this information anywhere. But if I go throw Apple in here, okay, I get a very interesting comparison here. So if I go to this statistics tab here, okay, so you can see market cap here, it's the same here. Gives you a bunch of other ratios that we've talked about. But if I just go to statistics here, this gives us a very quick kind of look at market cap versus enterprise value. So if we look at the market cap, we're 2.48 trillion, and the enterprise value is 2.54 trillion. So the question that immediately pops into my head is, wait a second, why is the enterprise value more than the market cap? Well, what this tells me is that Apple as a company has either more cash or less debt, and that their shares are potentially, I say potentially, undervalued in comparison to their market cap. So this is a metric that we can actually look at. Now let's compare this against a similar company. So I go in and look at Microsoft, okay? I look at Microsoft, I can go, okay, well, what are they worth? Well, they're worth 2.47 trillion, and their enterprise is 2.41 trillion. So what that tells me is, okay, if we're looking at short and long-term debt and we're looking at cash on the balance sheet, okay, they actually have less than what their market cap is. So potentially, and again, it's not a metric you can use all by itself, but it is one that we can add in. We can say, okay, perhaps in relation to their market cap value, that they're a little bit overvalued here. Okay, so this is one of the ways we can use this. All right, so what we're doing here is, I want to just kind of reiterate it again, with enterprise value, we're looking under the hood saying, okay, what else is going on here? Just not the size of the company, but let's see what their actual business, is doing, the nuts and bolts, the engine of it, and how is that performing? And then we can use that to make an inference of value. Okay, and it's not just one metric, but it's many metrics. So what we're going to do, going forward with this segment is we're going to use this enterprise value, so a very specific measurement of a company, and we're going to start to use that against other metrics, and that's really going to nail down or specify some really key components of companies. So the key takeaway here, market cap it's a way to measure kind of a broad scope of a company size, whereas enterprise value takes that broad scope and narrows it down to give us a more usable number. So that's kind of market cap versus EV. And like I said, it's going to really springboard us, because we're going to start comparing EV versus EBITDA, EV versus sales. We're going to use those metrics going forward to really nail down to get a very clear picture of what a company's doing.
Greg, once again, thank you so much for another excellent edition of Fundamental Focus, the Tackle Short on Thursdays. Really do appreciate that. And enterprise value can be a very good way to understand what the true value of a company is. When you take into account not just the shares times the price to add up the market cap, but you take into account also debt and you take on cash on hand. These things are important metrics as well. Thank you, Greg, for, again, another great edition of Fundamental Focus. Tackle Trading, we're in the books for today with the Halftime Report. You've been watching the Halftime Report presented by Tackle Trading. Like and share. Tell somebody about it. Get the good word of Tackle Trading out there. And today, Thursday, later on today, we got another edition of Cash Flow with Gino for the Pro members. And then Discord. Get over there to Discord Pro members and join the communication and the conversations we have in our Discord channels with the Mastermind group for the STEP system. If you're a part of that, coaching program if you're a part of that, Trading Labs if you're a part of that as well. All Pro members have access to our Tackle Trading Discord, and the links are in our reports, so check them out. And if you need any help with Discord, let us know, and we can certainly provide some